Attention! The warlock known as Jerome Powell will be in attendance on June 21st and June 22nd. Watch as the warlock moves the market with his words and creates wealth out of thin air. It is free to attend, but interest rates are still 5.25%. But in all seriousness, though, ladies and gentlemen, I hope you had a wonderful weekend. We have a week filled with Fed speakers, and that is pretty much going to be the only catalyst. We got a couple of data sets, and there's a couple of things going on overseas, but the biggest driver this week, it's going to be Jerome Powell twice, the vice chair, Mr. Jefferson, then you get Mr. Cook, and a bunch of other voters, but now following the Fed last week and the whole pause and then Powell's never going to raise again, this could do a lot. So we have a pretty simple week ahead of us. I have something a little different here today. I'm going to go over a couple of practical tips for you. Then I have a couple of plays. We're going to talk about the bond play from last week. And then I have one play or one geography that I think is going to have a lot of plays this week. So Chad, it's going to be super simple. Drop your thumbs up on the video. Hopefully we see you live, youtube.com/the stock market every morning. Free 99. All we ask is that you're positive and respectful, but we'll see you there. And I missed you guys. The long weekend, it's weird, but remember, everything overseas was open. But let's get right into it. The first thing I want to talk to you about is Jerome Powell and everything you're going to be getting on the schedule. So here's a simple way that you can know that this week is going to be important is essentially if you ever go to the Fed website and you go to news and events and you click on this calendar, if you ever see a scheduled event and you got Jerome Powell and a bunch of other Fed speakers, these are usually the bigger sanctioned Fed events. So here's the best part. If you want to find any of the other Fed events, you could go to Trading Economics, go to calendar, and you'll even see it'll highlight when Jerome Powell, they usually highlight it in red right here. But if you ever go through all of these speeches or the calendar, what you'll notice is sometimes the speeches will be on Trading Economics, but they won't be on the Fed website. But what I'm trying to tell you here is the speeches, when they do show up and it's filling the Fed website, that is how you know you have a packed week in terms of Fed speakers. So that's the main key here. You're getting Jerome Powell Wednesday and Thursday. I said Tuesday and Wednesday earlier, but that's why we got the calendar, thankfully. But whatever he says, I mean, we just got his last press conference. The markets are up since then. The Fed futures are pricing in rate cuts still, even though they temporarily priced them out. And we're going to see, is this going to be Powell's Jackson Hole moment? He's had almost a year to do it and he still hasn't, so we're gonna find out. But overall, what the Fed says, especially Jerome Powell, these are gonna be our bigger drivers. So like I said, you have a couple of other events. If you do want to go through my calendar right here, it's only showing, I believe, China and the United States, but go to the UK, you'll see we have like events like the UK Bank of England. They're doing their first interest rates, or they're doing another set of interest rate increases. That's gonna be the only other driver. But besides that, it's gonna be all about the Fed. I do have some things I want to talk about with China, but that'll come up here with the plays. But like I was saying here, just in the sense of getting some practical tips here, I think we're going to see a lot of bond action. We're going to hear a lot about Fed policy and moving forward. So I just showed you the Fed calendar. Keep that one in mind, but just don't forget here, if you go to investing.com and search the Fed rate tool or the Fed rate monitor, this will show you the Fed futures, and these are the probabilities that we are always talking about. Anytime you hear people say there's a 50%, 100% chance odds of a rate hike or a rate cut, this is what we are talking about. But like I'm saying this week, if it's only going to be Fed speakers, watch the calendar, watch the Fed futures, watch the bonds, and as we move forward, whatever happens with this curve and pricing in rate cuts for this year or not, this is going to have big implications. So just be familiar with this website. And then the cherry on top, because we did bring up these conversations on Friday, and then when we start talking about the bonds, I hope this makes sense. If you ever go to CNBC and search the 2-year, 10-year spread, this will bring to you the 2-year, 10-year yield curve, and this is showing you pretty much in a chart form how it has been inverted. So negative 0.95, that is saying the yield curve is almost inverted by 1%, meaning that the 2-year yield is almost 1% higher than the 10-year. So in the context of everything, rate cuts, the Fed, all of that, everything I'm showing you here, the reason why I'm bringing it to you in this watch list, because I don't think we're going to have too many crazy news events. It's going to be what these Fed people say, and depending on what they say now, the bonds, the Fed futures, and the yield curve, I think this is where all the action is going to be. And if you've been watching any of the yield curve videos, I think when we first brought this up, it is now, I think we're like 1 or 2 weeks away from finally being inverted over the last year. So these are your main keys this week, or we're going to see where the rest of the week develops. But besides that now, it's going to be super simple. So let us get into the plays. But right off the bat, I only have 2 different plays. We're going to be talking about the bonds, and then we are going to be talking about China. So one, I'm going to start with the bond play. If you remember, we've been talking about /ZT, /ZN, and all of those different ones. I'm still holding the /ZT, and if you didn't check out the last couple of watch lists where we're talking about 2001 and 2006, I would go and see what's going on there, because we still haven't broken out of this range. But the main key I want to give you for this week, when it's talking about all these Fed speakers, we're going to be looking at a lot of bonds. Why we're looking at the 2-year, or here's something to keep in mind, is essentially the 2-year responds more directly to policy. The 10-year, more duration, there's more things priced into it. So what I'm trying to tell you here, why I'm on the 2-year, is that since it is linked to policy and the Fed more closely than the 10-year, I'm expecting that the 2-year will have less downside but also less upside versus the 10-year. So what I'm saying here is I think that the yields on the 2-year can go lower depending on what data comes out and if people really think this will be the last Powell hike. But then even if it doesn't, considering the fact that the 2-year is linked to policy, if Powell doesn't raise rates, or it's kind of more gentle and we're not anticipating a crazy aggressive Powell, I think the downside on the 2-year in terms of the yields going up, I think that will be capped. Now the difference is that this week though, like I'm saying, I think the 2-year has less downside, but depending on what happens, a lot of people right now, if you really think Powell is going to pause, they're buying the 10-year because there's a lot more upside. So that's the basic breakdown I want to give you. That's what I'm looking for. I think this week with Powell and the Fed speakers, we're going to be able to find out whether this is 2001 or 2006, and really once we go from there, we'll see what happens. We'll see what sort of upside we get on the 2-year or not, but ultimately I think that's going to be up to the messaging of the Fed this week during their speeches, and then how does the market believe them or not. So that's going to be the first set of plays. We're holding a bunch of those bond plays, and now the second set is all China plays. So this was the other big update over this weekend. Pretty much over the weekend we were expecting China to come out with stimulus, and they didn't, and now China names, I think they were all down like 2-3%. It was not good during this session. Remember, we're closed, everything else was open. There was even a couple of downgrades out in Europe. But what I'm looking for is if China now, is it this sell the rumor, is it still buy the rumor on stimulus? I think they're gonna have a really big back and forth week. So the last couple of weeks they were going up, we may get some downside this week, but now this is where it gets a little interesting. Over the weekend there was a lot of individual China news. So like JD, they got news about like making 7 different business units all worth like 14 billion. There was like a letter to all of the employees, so that was good news. We're going to see how that plays out. But then even BABA, even though there wasn't stimulus and a lot of China tech stocks went down, there was news related to like BABA's, it wasn't Singles Day, but it's like one of their shopping days that they have in June, and it set a record. So I think we're going to get a lot of individual news. Even last week we did hear a lot about China and AI, so we'll see how it plays out. But I think China this week, just outside of all of the Fed speakers, I think it's going to be a big one. We even had the Blinken China meeting as well, so I think we're going to get a lot of opportunities. Other than that though, it's going to come down to whatever the Fed speakers say. I would keep an eye on not only the regionals, but big banks in general, and see how they kind of like things. I think they've kind of been in a more subdued point, especially as tech and everything else has gone crazy. So just don't forget about that. But after this week, after a bunch of Fed speakers, we might have a lot more clarity on how to interpret the data coming forward. Then before you know it, it's only going to be like 2 or 3 data sets. Then you're into July, then it's Powell, and then before you know it, I hate to break this to you, it's going to be earnings all over again. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, it's not about timing the market. It's time in the market. It's all led up to this moment. You've heard it a lot, but now you got 6 more months, and you know you're almost halfway through the decade. It's 2023, and you're halfway through 2023. Before you know it, okay, that's not even a half. I did the math. I'm just saying, man, we still got a long time to go, but you are going through the modern era. You have opportunity. Put in that time. Most of you are still young, and we still got a long way to go. And don't get fooled, and that's it. That's all you got to do. Only way to get tricked off the book is up. All right, Chad, but I love you. We had a lot of rest, so I hope you all. I just knocked down my monitor. Okay, it's good. It's good. But I love you. Enjoy the weekend. I hope you got a lot of rest. Drink that water. I will see you in the morning, and that's it. And don't fall for the Powell. The Powell wizardry. Warlockery. Okay, that's it. I'm awkward. Okay, I leave. I love you. Good night, Horn.